Hey everyone, welcome back to my channel. I hope you're all doing well. In this week's episode, I'm going to share how I would reallocate money from SPY and ULTY to three ETFs that I think are actually going to make more money. So let's start with number three, QDVO, which is from Amplify, and these are the same fund managers that take care of DIVO. This is a growth and income ETF that pays monthly distributions. So if you look at the payout amount, you can see that it ranges from 19 cents per share to 24 cents per share. And what I like about this fund is I think as the share price grows, the monthly distributions will also increase. So I'm looking forward to tracking this fund over the next several months. Now, if we look at how it compares to other funds, you can see that QDVO is beating SPY and it's even beating ULTY by a couple of percentage points. So if you're looking for a place to park your cash that's a little bit safer and you still want to collect dividends, then QDVO might be a good fund to do more research on. Now, TipRanks forecasts the next 12 months about $31.50 to $36.70. So there's a lot of upside for this fund. Now, if we look at the number two option, Nefli, which if you follow this channel for a little bit, you know I think Nefli is one of YieldMax's better funds. And it's not talked a lot about on YouTube because the distribution isn't over 50%. It's a Netflix covered call strategy ETF. And again, it pays monthly distributions that range anywhere from 40 cents to 46 cents. And that's about a 30 to 31% annualized distribution or dividend. Again, I think because the distribution rate or payout is a little bit lower, the NAV is a little bit more consistent. Now, if we look at how Nefli compares to other funds, you can see that Nefli in the last 6 months is beating SPY by almost three times. And if we look at how it compares to ULTI, again, it's doing quite well. Now, if we look at how the stock or ETF moves, I show this chart because a lot of these funds that do covered call options on things like Google or Tesla, and in this case Netflix, they move in tandem. Now there is some capped upside, so they're not going to go up as much as underlying stock, but they have all of the downside movement. So why is this important? Well, as Netflix increases, Netflix will also go up by just a little bit. So if we look at the tip ranks forecast for Netflix, you can see Netflix is projected to go anywhere from 1,000, about 400 to 1,600 in the next 6 months. So I think this has a lot of potential for Netflix and has a lot of potential for Netflix. So let's move to the number one option. I'm sure you've all been waiting for this one, and probably a lot of people already know about this. YBTC from Roundhill Investments, and it's a Bitcoin covered call strategy ETF. If you believe in Bitcoin and want some exposure, YBTC might be a good play. Now, if we look at the monthly distributions, oh, sorry, I stand corrected, the weekly distributions, you can see that they range from 34 cents to 48 cents. I actually think that these distributions will probably be even higher as Bitcoin moves up. Now, if we look at how YBTC compares to other funds, you can see just like Nefli, it's beating SPY by a lot. And if we compare it to Alti, you can see that again, 25% total return in the last 6 months versus Alti's 9.5%. I think YBTC is actually going to make more money in the long run, especially if Bitcoin keeps growing. Okay, so that was just a little snapshot over the last 6 months. Let's see how they compare in the last 12 months. Now, if we look at the number one leader, you can see that in the past 12 months or just about a year, YBTC in total return is up 68.13%. I mean, that's incredible. And if we look at Nefli, about almost 55%. Now, QDVO is just shy of its 1 year anniversary. It came out last August. So once August finishes, it'll be 1 year. Now, if we look at the numbers for Ulti, I mean, 20% total return, it's still beating SPY in the past 12 months. So, although a lot of people do talk about Ulti's share price decline and maybe NAV decay, the numbers are saying that Ulti is still making money. Now, if we look at a risk to reward ratio, you can see that the maximum drawdown for YBTC is actually higher than the other ETFs because it is looking at Bitcoin, and Bitcoin is a highly volatile asset. If we look at Netflix, it's about 13.5%, and QDVO, which does have the lowest distribution, but it's also a little bit safer. Now, if we look at the Sharpe ratio, we can see that the numbers range from 1.3 to 1.73. And if we look a little bit deeper, anything between 1 and 1.99 is considered good in terms of risk to reward ratio. Now, if we look at some other ways to look at risk to reward, we can see that the Sortino ratio, it's about 2.4 to 2.99 for all these funds. And according to the Sortino ratio, anything above 2 is actually considered very good in terms of risk to reward. Now, if you had put $10,000 in these funds 1 year ago, let's look at YBTC. 10,000 would be 16,000 today. Nefli would be 14,000, and QDVO would be about 12,000. So they're all making pretty good money, and they've been a little bit safer than some other funds. All right, so that was just a quick video. I wanted to share some ideas because I know a lot of investors have been talking about where to move money away from Ulti because Ulti maybe just hasn't worked out like some people planned. I think SPY is always a good choice, but if you wanted to diversify your funds and maybe make a little bit more income on the side, then these three ETFs might be good choices to do a little bit more research. Well, thank you very much for watching. If you like this video, please drop a like. And if you're interested in following more ideas on how to make money and retire, or not retire, but just achieve financial freedom a little bit earlier, subscribe to the channel to follow my journey. Take care and see you in the next video. This video is for entertainment purposes only. It is not intended as financial advice. Consult with a qualified financial advisor before making any investment decisions.